It's time for today's three-stock lunch. We look at three big movers of the day. And here with our trades is Boris Schlossberg, BK Asset Management's Managing Director of FX Strategy. He's also a CNBC contributor. Up first, let's look at SoFi Technologies. The stock soaring on earnings. The company reporting, well, its first ever quarterly profit. The stock up as much as 22% today. Boris, your trade on SoFi, the fintech company.
SoFi is a really interesting story. It's clearly proving that an online-only bank is starting to resonate with consumers quite a lot. Growth has been tremendous. They added about 550,000 new customers, about 41% growth rate. They've recovered most of their loan book to student loans. So I think business is really cooking on all cylinders right now. Management is also, I think, very conservative in terms of how they forecast their numbers forward. Now, stocks really run, so definitely very expensive at this point. But if you have, I would say, a 2-year time frame to 225, it's probably going to very much catch up with its earnings because it's now starting to enter that stage where it's actually going to really pretty much every additional dollar is projected to produce about 20 cents of gross earnings. So I think it's very, very feasible that you could see by 2025, you could see $10, $11, $12 on the stock, given its growth potential.
All right, Boris. So that's the trade on SoFi. From fintech to media, let's go to Warner Brothers Discovery. Wells Fargo analysts are downgrading that company from overweight to equal weight on what it's calling a risky earnings setup. Shares are down about 3% or so, as you can see there today. What's the trade on WBD?
So I probably have a little bit more of an out of consensus view. I think this could be a value trap for a lot of people. And I know the bullish case on Warner Brothers is they're the second biggest spend on content right after Disney. They have a stellar library of assets, so on and so forth. But the bottom line is they're basically still in the broadcast business, and the broadcast business is just dying with the actuarial tables. I mean, one of the great examples is that when you look at news ratings for the election season this year, they're 50% down all across all the networks. Literally nobody's watching TV anymore. And I think that's a very big problem. And the old adage that content is king, I think, is false, because what Netflix, I think, is proving that in the streaming world, it's actually subscribers that are king. You can always buy content later. And I think that's the danger with Warner Brothers. So I would be a hard pass right now on the stock.
A hard pass. All right. And bad news for television watching. All right. Finally, ResMed shares, except for CNBC. I mean, come on, man. Give me a break. All right. ResMed, shares of that company moving as competitors' sleep apnea products are pulled from the market. ResMed CEO also saying that weight loss drugs have not lessened the need for sleep apnea treatments. Shares of ResMed up about 1% today and 12% so far this year. Your trade on ResMed.
Right. So this has been, I think, actually a gift to investors in many ways, because they are in a business that is very, very much going to be in demand going forward. The company projects that there's almost 1 billion people across the world that have various sleep disruption problems, including sleep apnea. So the demand going forward is just going to be very steady. And I think the fear that the GLP-1 drugs were going to essentially eliminate the need for this product is proving to be very false. Even in the worst case scenario, it may be just a 15% hit to the overall market. But what they've actually found when they did a study is that most people who actually took GLP-1 drugs actually increased the demand for these products, probably because they want to just maintain their overall health once they get to a sort of a better position. So overall, this has been a great scoop for investors. It's actually bounced quite a lot since then. But again, I think a long-term, very, very steady, almost a recession-proof business, obviously, because this is sort of a demand that's completely outside of any kind of consumer taste.
So it's not a snore.
I see what you did there. I see what you did there.
Talk to me about where you see the market headed. The Fed meets later this week. If it, as most people think, does nothing, what does that do to the market, if anything?
Not much. I think the market expects the Fed to do nothing. I think the Fed is going to be far more cautious. I mean, everybody in the world has already talked about the fact that the market is anticipating way too many rate cuts than what the Fed is actually going to do. But I don't know if that's really going to matter, because at this point, if the economy continues to chug along and we still continue to see earnings growth, it may not matter as much for the Fed to cut rates. They will probably ease at very minimum. It's in everything in the markets is a matter of relativity. The fact that they stopped tightening has already created a lot of loose conditions for the market. People are already saying that their lending is much better. So all of that should actually point to a more positive market move in the near term.